Welcome to Budget Countdown. We've got 2 trading days to go before we go into the budget with a big bang. And from what it looks like, number of sectors are looking very excited in anticipation of big announcements in this one. And this one particularly has more significance than the others that we've seen. And it's also the 7th budget of the Finance Minister.
Yeah, and a crucial one because it's happening at the start of the 3rd term and at a point of time when the government has maths in its favor, but also has some added responsibilities of state capex and maybe some bit of consumption focus needed to be attended to. So it's an interesting mix, but the math is clearly in the government's favor, so it'll be interesting to see how they utilize the math.
The question, I think, is that is this budget going to show any kind of response at all to the election results, where it was not exactly what the ruling party would have wanted? Are they going to interpret that as a further push for welfareism? Anyway, let me just tell you what we're doing, all 3 of us are doing here on this show today. So we're going to speak to the NDTV Profit think tank. This is our collective of great minds, voices on what to expect from the budget. And all of these great thinkers will be with us on the budget day as well. So we thought it best to sort of set the stage with them, see what they expect, what they're saying, and then we can tally up on budget day to what has really been announced. So let me introduce who we'll be speaking to today and the members of our esteemed think tank. A. Balasubramaniam, MD and CEO, Aditya Birla Sun Life with us. We'll be speaking with Pranav Saita, partner and national leader of International Tax and Transaction Services at EY India. Manish Dangi, CEO and founder at Mosaic Asset Management, will be also giving us his views, and of course we will be speaking with others as well on the show. So let me begin actually with your take, A. Bala, and you know, let's start from the market's point of view. Is the one big fear any kind of tinkering with capital tax? Because all things considered,
I'm not able to hear you, actually.
Can you hear me? Can you hear me? I don't think Ebala can hear me. All right. So let me try and get him on for a second. And then let me come to Mr. Pranav Saita on, I think, the big question on top of mind. If the push and the ask is to put more money in the hands of people, is there any chance that they would try and tinker with personal taxes? Do you think that they will succumb maybe to the temptation of capital gains tax? Does that seem in the realm of possibility with what you're penciling in, Mr. Saita?
So yes, on the expenditure side, I do think there will be a push towards consumption, towards more revenue expenditure of the government, a little more focus on revenue expenditure of the government than capex has been for the last few years. But I don't think on the revenue generation side, from the taxation standpoint, I don't expect any major tinkering with the capital gains tax regime. I do feel on the personal tax side, which was the other question, I do feel there'll be some more money left in the hands of consumers, whether it is increase in the threshold limits for individual taxation across the spectrum, or whether it is in terms of a higher standard deduction for salaried taxpayers. So I do feel some more money in the hands of personal income taxpayers so that there is a consumption push and it helps tackle inflation to these guys. And also, I do feel that the capital gains tax regime will be kept by and large stable. I wouldn't be completely surprised if on the short-term capital gains tax, there is some tinkering, whether it is in terms of increase in the rate or increase in the period of holding. But largely for long-term capital gains tax, I don't anticipate any major tinkering at all.
Okay. Manish Dangi, let's start with that, the point that Mr. Pranav Saita made. Is that a relief, or do you anticipate, or I mean, is the market working with an estimate of some tinkering in capital gains? And if it doesn't happen, it's a relief, or is it a tape that has played nearly every single time ahead of budget and therefore not really that important?
No, it's the thing whose time will someday come. And so it's just the train coming from the other side, and it will hit you someday. It will more or less certainly hit you in this term of Modi government. It is not a local thing. It's a global consensus to tax the rich. And therefore, would come, but very likely, given the mandate and the priorities that may have changed for this government, given relatively weaker mandate, I would say I would agree with the gentleman that it may not come. Some form of harmonization in terms of various asset classes having different tenor for capital gain, long-term capital gain, could collapse into just one, which could be 2 years. So that could come, but and of course short-term capital gain. But these are all sort of pure speculation. No one knows. This is I'm very certain on this, that the capital gains, okay, pretty much all will eventually get aligned. Will align with what Europe does instead of what US does. But again, there is a good news in terms of Trump likely winning, and which is what markets are cheering in US also, and therefore it may get postponed by another 4 years until the next time the Dems come.
Hey Bala, you want to comment on that too? Do you feel like while they may not tinker with capital gains in a big way, arbitrage funds, which is a very specific product offering, may see some tinkering? And the reason I ask you this, because there is a definite need to shore up deposits for banks, and fixed deposits have been struggling largely after debt taxation changed and arbitrage became popular.
On the contrary, we have been making a pitch that taxation, which was existing before in the fixed income product, should come back. And given the fact that India needs vibrant corporate bond market in India, and so far equity market has been helping the corporates to raise money at ease. A similar situation should be created as far as the bond market concerned as well. So that's something we made a representation to Minister of Finance that in order to develop a very vibrant capital market on the bond market side, we must bring back the taxation which was existing before for the fixed income schemes. And given the fact that mutual funds can create a huge impact in development of the bond market as well as in the past. As for the arbitrage fund concerns, I think from a government point of view, it's not an easy decision, given the fact arbitrage fund together, collectively, all mutual funds put together, would be managing close to about 1,50,000 crores, and it provides relatively better security transaction tax for the government because the transaction, more the transaction happens, it provides actually security transaction tax. Therefore, from the government point of view, by removing it, what would they gain? The gain probably will not be anything significant. And today, whatever said and done, arbitrage funds have been providing the much needed liquidity to the market. And second, it also has been ensuring that rate of carry forward is not very high, given the fact that the arbitrage funds have been primarily participating between the spot and the future. On top of it, revenue collections coming from the arbitrage from the government point of view is also quite significant. Therefore, I don't think they will tinker with the arbitrage fund because it serves many purposes, which is for the stability of the market as well as for the government taxation point of view. So as far as the fixed income concerns, my own belief is we will see that coming. As some of the others were mentioning, or Manish was mentioning, there is high probability, what Finance Minister has been often saying, there's a lot of confusion in terms of tax rates. It should be easy to understand. You wake up anybody in the night, you can give what is the tax applicable for various instruments. Therefore, they want to bring in some kind of commonality. There is high probability all the tax rates get aligned, either all in one or all in two or in three. When I mean all in one, it's a capital gain tax for equity is one, real estate is two, and other asset classes is a three. Therefore, there is high probability they may get these things aligned as a single period kind of things.
Okay, so that might not necessarily be seen as a positive immediately for the markets that day. But then let's sort of set the context of what are the key markers that everyone's looking for in this budget, and we've tried to simplify it, and we'll put that out for our viewers and of course ask our think tank about it. Number one, are we going to see a big push for rural India? I think that's a no-brainer in terms of a question because you need those rural incomes, bottom of the pyramid incomes, just broadly more than rural, to even come up to speed. This sort of RBI bonanza that the government has got, is that going to be pushed towards consumption? Is that going to be the priority, or will it be capex? I think we've talked about the capital gains question. in some detail? Will that be restructured? The consensus so far seems to be that yes, you might see something through the term, not necessarily in this budget. The other point, that if you want to push manufacturing, will you double down on PLI schemes? Is it going to be more of the same, because they seem to have worked to some extent? And of course, will there be relief for taxpayers? And will all of that once again be pushed to the new tax regime? I think those are some of the key points. Should we just get a view on point number one first, on the push for rural India? And Manish Tangi, I think this is one part where, or one point where the finance minister might surprise by doing things at her own pace and really not feeling that pressure to show like a lot is being done for the rural voters at the end of it, and not really bother too much about those headlines coming out, that big push for rural India. Do you think that we're misreading this?
So there are two things here. One, voter isn't a constituency in this budget. You've sort of you've gone past that point already. You have
elections coming. Manish, the reason I ask is two big state elections coming, both agrarian states.
I know. So I'm getting there. I know that. So I'm saying, which is why two parts to it. So, but a better way to address this is to do what, let's say, Maharashtra government is doing. So launching a Ladla Bacha or Ladli Behna or such like scheme. So the India is pivoting from actually central government doing largesse to now central government sort of on lending to state governments, and they in turn actually addressing the specific need of their constituency. So I guess what budget would seed is that maybe a lot of loans being advanced to many governments. We'll discuss about what Andhra and Bihar package could look like. Some assistance to Maharashtra government to actually fund some of the schemes and ambitious schemes that they want to launch and such like. For rural India, what exactly and directly that you could do, this government does not believe in, except through subsidy and stuff like that. It's only through Kisan that you could actually distribute some largesse. So could that number go up? Totally possible. From 6,000 to 7,500. I thought of this even in the January speech. It should have happened, but it didn't happen. So I'm not very certain that the bounty that government has, it's about 160,000 crore, a lakh crore extra from RBI, and rest 50-60,000 crore coming in from better run rate of tax collections last year and this year. That bounty will rather get distributed in other things that we should discuss later. Purely from rural standpoint, really don't know exactly how and in what form, can this be distributed, given the current methodologies that the government employs.
Manish, you make a very important point. Sorry, just a follow up there. The dole outs to state. I mean, I think this government seems to be following a model that the capex as well in some portion will be done by the states, and therefore give interest-free loans to states as opposed to just giving a dole out to states. And part two is the thought, therefore, that whatever the state does in terms of largesse is not going to impact state elections as much. So rather not go down that route. So that's part one. But part two also, the capex uptick, will that also be done via states as opposed to doing a large number, because half of the fisc or nearly half of the fisc is passed? How much can you give more to an economy for so that the economy can even digest it well?
Look, Indian government is not, and I've made this point many times, even on your channel, that, it's not constrained for money, but constrained for the capacity to spend. Okay. Outside of just general transfers to people at large, frankly, there are limited ways that the Indian government can spend, especially for the fact that, CAG audits it once you've spent. So I guess states have better capacity. I think the Modi government realizes this, and which is why you have right now two major projects, both in Andhra as well as Bihar. The blueprint is likely ready. They may have submitted it as to how they want this money to be spent. In Andhra, certainly because of Amravati, a very, very large expenditure is planned. So I guess a capex push plus actually satisfying your partner it comes in the form of government giving large loan, likely 25-30,000 crore, maybe more, to these states to actually fund to do a lot of infrastructure build. That's the likely path. How government of India actually uses this 160,000 crore bounty. So you will actually, in the end, see in the budget that there is a bump up in the capex spend. Large part of it is not because Indian government is actually spending a lot of money, but is actually on lending to state governments to one facilitate this whatever investments that they're making. Plus also some of the governments who would potentially use this for dole-outs.
We got your view on personal tax, but across industry, one of the key asks is to extend the sunset clause, which is a corporate tax rate of 15% for new manufacturing facilities. If India has to become the manufacturing hub, and extensively we've talked about how private capex needs to pick up, do you feel like an extension of the sunset clause is very likely or almost a given in this budget? Pranav, Sethia, that was for you.
Yeah, so I do not think so. The government seems very determined. If you're talking of the 15% plus surcharge cess, which adds up to about 17% corporate tax, which is the concessional tax rate for new manufacturing companies, I do not think they are inclined to extend that. Would they have, had they been inclined to extend that, I think it would have been done in the interim budget. A lot of sunset provisions they did extend during the interim budget itself. This one they did not. And based on our interactions, they seem very, very clear that they do not want to extend this 17% concessional manufacturing company tax rate. Yes, I do expect that there will be some form of fillip to the manufacturing sector, particularly private capex is something that needs some push for sure. So I do expect things like addressing the inverted duty structure to whatever extent they can. PLI will get a little more push. MSME financing will probably get some more push. And I do feel, therefore, that private capex will be one of the things on the government's agenda. On your previous question, actually, on rural, I do feel that on agri-infra side, both logistics and productivity push is something that they might invest in. And I do feel that housing in the rural sector is also something that they might really look at. So some form of rural push I would expect in this budget as well.
Now, the rural push is one bit, consumption is one bit, and often, we end up conflating it all in one huge concept. But the fact is that if you want to increase consumption, there are several ways to do it. Either you increase incomes or you reduce taxes and payouts, and the big hit is GST, which the budget cannot really do. It's not in their purview. So let's come to that question, Bala, and let me come to you on that. How crucial is this consumption story? Because when we're speaking to large FMCG companies, they're talking about green shoots, turnaround, but saying, hey, we need a bigger boost. Just going with the flow is not going to help. In your view, what can the government do, and what is Finance Minister likely to do?
I think consumption is the large component of the economy, there's absolutely no doubt, and therefore it needs a special attention. But that attention cannot be given by way of giving incentive to the FMCG companies and so on and so forth. It can only help in increasing the demand coming from the people who are largely the consumers by way of giving more money in the hands of people. Therefore, one of the options the government may consider is increasing the tax slab. Currently, up to 7 lakh rupees, you don't pay any tax. And then above that, there are tax slab stat. Therefore, there is high probability they may tweak the tax slab structures. Therefore, say up to 10 or 12 lakh rupees, you'll have more money in your hand. And given the fact that the need for spending at every household has been rising, either it is for home furnishing or buying a home and so on and so forth. So lifestyle is changing. Therefore, plus also the middle class income levels are also have gradually rising, more people getting into the employment side. So therefore, there's high probability the tax slabs could undergo a change. As a result of changing the tax slab, it will probably have an impact across the taxpayers. Therefore, the consumption can get boosted. That's one. Second is, earlier they talked about rural. Well, of course, rural income is dependent on agriculture, and there has been of late the government has been spending more on infrastructure building in the rural India, especially in the renewable energy, solar energy is now being the focus, area of focus for rural India. Where every household in rural India can avail the benefit from the government of subsidies and set up your own panel of say what do you call the solar energy panel. Therefore, whatever you consume, rest you give it to the grid that is being set up by the government of India, so they get additional income. So I think the focus that they have been having, that increasing the income level for agriculture in the country would be the focus. Not necessarily it has to come in the form of increasing the MSP, not necessarily it has to come in the form of other subsidies that we provide, where they already provided enough. Therefore, there will not be many room actually for that, much room for that. But definitely they can increase the activities coming surrounding the rural India, which will of course provide employment, will also give additional income and so on and so forth. And including the canal development, I think water resource management has been one of the big area of focus. The government has not spent enough spending on these areas, which will have ultimately benefit the rural economy as well as the agriculture economy. Therefore, some bit of increased allocation could come on the capex side on this side as well. Therefore, I think if you look at it on all India overall basis, definitely the government, as Manish mentioned, that there is a good leg room that's available for the government on the fiscal side. Even as we move forward, there is high probability increased compliance on tax payables will keep increasing. I will not be surprised. The GST collections, it will not only cross 2, it will probably get close to about 2 lakh crores per month. It can become. Therefore, on overall basis, they will have enough leg room for them to spend money by cutting tax rates rather than doing anything else.
Okay, so maybe cutting tax rates, maybe making it great for the lower middle income class or the middle income class as well to have some more money. Actually, speaking of tax rates, Mr. Sehta, can I come to you? One need, dire need, to attract global manufacturers with even more vigor. We are doing well on the high-tech front, not as much on the low-tech front. And one of the views that is coming in that tariffs are not predictable, tax rates not predictable, and global manufacturers don't like that. Can something be done in this budget print to make it more predictable so that we can attract low-tech jobs which are more job generating, textiles, toys, what have you?
Right. So I think by and large, this government's hallmark has been a fair degree of stability, predictability in the tax laws, particularly on the direct tax side, but also to a large extent on the indirect tax side. I do feel that some of the inverted duty structure piece might get addressed, but other than that, from the indirect tax side, we do not anticipate any major steps that would change this particular pattern of stability. I do feel, however, that in terms of some of the other points that got discussed, yes, in terms of skilling, demographic, rural, there might be some spend around that. And to give more opportunities from an employment generation standpoint, some incentives could be expected, but not particularly in the indirect tax regime, as I see it right now, at least not through this budget.
Well, Manish, I'm going to take that question of Neeraj and extend it into the other complaint a lot of global companies have when they come into India is that our cost of logistics are very high. So globally, cost of logistics are 10 to 12%. India is anywhere in that 14 to 15% range. And we've seen over the last couple of months, the focus of the government or the focus of the investors has been logistics, right? Aviation, railways, roads. Do you feel like, and this is going a little beyond the budget, if you're buying India for the next 3 years, would you still stick with the same theme of road, rail, and highways?
One, it's improved a lot in terms of our ranking. Two, Rome wasn't built in a day, so it takes time. Three, one very, very big achievement of Modi 1 and 2 is to pivot India to build East Asia-like infrastructure. And I think, that is one of those very, very big success. And I think, this budget next and a budget after that, what succeeds for a politician, he must go after it over and over again. So I think that will continue. I think our roads have improved quite sharply. Ports are actually beginning to improve. Capacity has risen dramatically. Railways, despite humongous investments, the quality as well as the capacity hasn't sort of improved as much. Of course, water, sanitation, and few other things at margin have grown, but nothing close to the dazzling growth that you've seen in the road infrastructure. So I think it pivot to some of the other infrastructures, could actually improve both life of a household, but also, of course,
Right.
at margin,
Manish, while
life
this
of
is
a
sounding
corporate.
like a very holistic, qualitative answer, yes, India first, and we're all here for it, our civic sense needs some help. But that aside, what I was trying to understand from you is money to be made over the next 3 years in these sectors. Is this still a theme that could create significant wealth?
I agree. I agree. I mean, look, anything what you make money from is either the valuation gains or earning gains. I guess it's very likely because of the push in these sectors, the earnings will grow. But as you see in many of these sectors, they're actually valued at 100x of the 2 year out earning, 1 year out earning. Difficult to make money in something very, very expensive, even though underlying sector or companies do very well. So the answer is not straightforward, but I guess the corporates will do very well in these segments in next couple of years.
Okay, Ravi Dharmshi has joined the party. He's founder and CIO at ValueQuest Investment Advisors. Ravi, great to have you on. So once again, for those who have joined in, this is our think tank, and of course Manish Sabharwal as well, who you will see with their views on budget days on NDTV Profit. So we're trying to sort of understand ahead of the budget what they want, and then we can tally up whether it's what we saw or not. So Ravi, the quick question of why are we seeing nervousness in the market? So let me come to the here and now. We have a couple of trading sessions left before the budget, and there seems to be a sense of maybe hedging bets. Is there a concern that there could be something adverse coming in on how equities are taxed, or maybe not enough to cheer on the markets further?
I think we might be reading too much into a couple of days movement from the perspective of what holds in budget. I think the mere fact that we haven't corrected in a significant way for 4 years and the valuations were running high is good enough reason for the market to take a step back. It's just that going into a big event and we haven't corrected, I guess that in itself is reason enough for markets to take some money off the table. So I don't think we should read too much into it from the perspective of what's coming in budget.
Okay. So Ravi, to your mind, what is coming in the budget? What is the one thing that you're watching out for which you believe is a near certainty? Capital markets perspective.
No, so from the perspective of where we are in the economic cycle, there are two ways to look at it: what's coming and what should come. What I would like to see is that the equity as an asset class should continue to be favored. Yes, we are facing some challenges on the banking deposit side, and some incentivization might be required, but it should not be at the expense of the equity markets, is what I feel. Secondly, I think the slight tilt away from capex-oriented sectors towards consumption-oriented sector is what the monitorable is for me. How hard is that turn the government takes is something that I'll monitor, because what the analysis of the election outcome and the upcoming state election is that the government, there is distress in the rural areas, and that distress needs to be addressed. So just doing supply side reforms and teaching people to fish is not going to work. There is a need to give a little bit of fish. So how hard is that turn? Is it at the expense of fiscal discipline, or is it something that the higher tax buoyancy and the RBI dividend can take care of? If that is the case, then I think the middle path would be a great outcome for the market.
Bala, I'll come to you as well on this. And while the list of needs, wants is extensive, tell me what is non-negotiable? What should not happen in this budget?
Oh, definitely, the going is good in I generally call it as all cylinders are firing from the economy point of view, whether it is robust tax collection, whether it is robust, vibrant stock market, and Indian, I think people would have never dreamt that they'll be able to raise equity capital from the market so easily, and today it's available in abundant. So that's something is a reflection of the optimism, reflection of conviction that everyone holds on the Indian economy. I think which essentially has come on the back of stable policy, predictable, and earnings growth have been very good, very stable interest rate regime, and therefore What should not be there is more cutting down some of the expenditures and increase the subsidies and so on and so forth. I think that should not be coming in because the government so far the last 2 terms have never done anything which is more like a waste when it comes to the question of expenditure. So most of the expenditure has been more productive in nature. I think that they must continue. And though there has been a wider discussion about because of state elections and so on and so forth, they would probably take the route of giving more freebies. I think this expectation always comes, but this government again and again proven that they don't take that path. They'll probably take the path of driving the economic growth to the next level and working towards $20 trillion economy. I think that should be the focus even in the budget.
Agreed, and I get that point, Ebala. I agree completely that time and again the government has surprised in that sense on the positive when seen from the view of capital markets, that they haven't given into temptations of fiscal profligacy or populism, etc., etc. But one thing to watch this time, and I'm just going to quickly come to Manish on this question. Will this be a key factor to see how much of allocation to projects which big allies or important allies want? So how much goes towards an Amravati? How much does Bihar get? Because these are also key allies, right? I mean, so far everything has been gung-ho and stable, but is this something that you would watch closely?
Yeah, it's very likely a deal already. So, and it's likely a good deal. So what has been UP for last 5, 6 years, 7 years, I would say would be Andhra and perhaps even Bihar. So that will be for India and for all of us, it will be an additional incremental engine of growth.
So that won't be seen as a negative necessarily. And you're saying the deal is already done, the halwa is already made. So that's fine. But I'm saying, so that's not going to be seen as a negative in terms of, that there is a leverage to be used by allies. So that's not a negative. Because remember, you're talking about UP, but they are running UP. So that's a different story.
No. I mean, NDA is running Bihar and Amravati. So in a sense, it's no different. It's absolutely the best way forward that an ally actually trade off some constitutional positions, speaker positions for the development of the state, and sort of we all as market participants should be very happy for this trade. And more importantly, there is a plan in the mind of the chief minister to execute a very large project, which he has, which he did phenomenally until then he was shipped out of that job. So in fact, we did lend to Amravati projects long ago. Did visit that. It's a phenomenal project, and it will be seen as Chandigarh was seen 40, 50 years ago, an entirely new city, and could become a modern city for many other states. That you could actually end up having new capitals in many states if Amravati succeeds. So it's a very, very good deal. That's what's happening.
Could be interesting. Okay, my final question to Ravi Dharamshi, the known elephant in the room, or the big elephant in the room, actually both actually. Which is the fisc glide path, right? When S&P upped the outlook, they spoke about how India needs the center per state to come to sub 7%. Now we know states are about 3%, so center needs to be at 4%. Do you think they'll use this opportunity with the extra bonanza that they have to overshoot on the fisc number, or will they just meet the numbers, talk about 4.5 next, and then let the market believe that they are en route 4?
The headline numbers clearly will maintain the fiscal glide path. I don't think the headline numbers will change dramatically. However, the devil will lie in the detail. And over there also, I believe this government has shown tremendous fiscal discipline. I don't think they'll veer from that path in a significant manner. The extra, almost 1.2 lakh crores of dividend from RBI and another 40-50 bips of extra revenue through the tax collection gives them enough room to cater to their allies' needs, cater to the upcoming state elections need, and yet not veer away from the path of fiscal discipline.
No, actually, I was, Manish, I know you want to comment, but I was actually asking that can they actually beat it by 10-20 basis points closer to 4.5. So could that happen? Because we haven't seen that happen. But Manish, you were raising your hand. You want to come in on this?
Very quickly, a market expectation, and again, that's built by actually talking to a lot of folks in Delhi, is 10 basis point further consolidation.
Okay.
So I guess this is what bond markets are cheering for. Two, and I think Bala did talk of it, this major confusion which lies in the mind of a banker at a conceptual level that, if money goes to equity market or arbitrage fund, it means lower deposit rate. That's not the way banking or financial plumbing works. Almost all money, almost all money lends up in banks, and therefore, even though you see in last 2 years, initially the conversation was that if mutual funds getting a lot of money and therefore clamp down there, so the tax treatment to debt mutual fund, the soaps were removed, and yet what you see in last 2 years is very little deposit growth. So this conceptual misunderstanding leads to a lot of these pathways. That if money goes to equity market, therefore at margin bank is losing. No, if money goes to equity market, it is still there in the bank only.
Right. Ravi, one quick question before we have to start wrapping up the show is high conviction ideas. So what are the sectors and sub-sectors that you're betting on which form a part of your core portfolio currently? And you don't need to give me stocks. I'm assuming there'll be a restriction there, but sectors, sub-sectors that the big bets are where the alpha is going to come from.
No, so I think before what to bet on, I think what is important to note is there are some sectors which are dependent on central government capex, and those sectors actually face a risk. There might be no increase in the capex from the central government side on the defense or on the railway side. So those sectors, and they have been the best performing sectors, no doubt about it. There might be some earnings momentum which carries them through, but I don't see incremental order flow to that sector or incremental allocation to that sector happening. So those are the sectors which clearly face a challenge. Overall, I feel that ideally there should be some shift away from capital goods and such sector towards slightly more towards consumption and export oriented sector. One, primarily because these sectors have not done well for the last 4-5 years. And there is a valuation, if I can say, the valuations are relatively better over there. Second, there are some green shoots beginning to appear over there. So the risk reward from a 3 to 5 years perspective is more on these side of the sector rather than towards the capex oriented themes.
Okay. Final question from mine to Mr. Seta. Mr. Seta, to your mind, based on your conversations with corporates around taxation or otherwise, and keeping the budget math in mind, what is it that you are watching out for? What is it that you think your client list is wanting from the businessman perspective?
I think by and large, clients and the corporate sector is happy with the current tax regime and the stability thereof being maintained with not too much tinkering, not too much changes. I don't think there is a big expectation of some big stops to the corporate sector from the tax point of view. But certainly there is an expectation and hope that stability and predictability, which has been the hallmark of this government, will continue. And of course, a big expectation that the way this government or this regime has managed the macro stability of this country, and that is across various parameters, will be maintained. I think two big things that need to be addressed, of course, the food inflation and the rural growth, which are very muted. Food inflation is high, rural growth is muted. So something there. And I don't know, I mean, not much is being spoken about, but while there is enough both tax revenue as well as non-tax revenue that the government has, both from the direct indirect taxes side as well as maybe non-tax revenue like the RBI dividend, I'm not too sure whether it's a bad idea right now if any further funds are required and to manage the fisc better. It might not be a bad idea to really give a big push to PSU disinvestment at this stage. The valuations are really good. I think the market dynamics will do with some additional supply side on the capital market side. And it might be a good way to also shore up any government revenues, improve the fisc, and probably even give a push to some of the expenditure initiatives that might be required for various reasons that we already discussed.
They don't seem keen, though, to disinvest anything. So is that in the bucket of I hope this happens, but I
This
don't
is
think
more-
it will?
That's more in the nature of hope. That's more in the nature of hope, but I wouldn't completely rule it out. I think it might be actually a wise move in retrospect if the government were to look at it.
Okay, so then let me ask that to A. Bala as well. What is in your list of I hope this happens, but it might probably not?
No, I have different argument on that. I think the government of India has become more richer with the increase in the value of all the public sector companies.
Correct.
And therefore, the richness of the government, not necessarily they have to divest and therefore bridge the fiscal gap. Along the side, they also create a huge
Bala,
asset.
just one point to that. Everything is not an HAL. Na? They also have an MTNL. It's not that everything is a jewel.
No, one of the things which in my own belief is the asset that we have created, leave aside market cap. I think the asset that they possess, whether it is through the NHI or through the Power Grid Corporation or through their public sector enterprises, asset that they have created can be monetized by way of selling to the pension funds. Asset monetization has been a big program where the government of India has been pursuing for the last many number of years. They have not done much on this space, and there is a high probability the largest FDI investment in the country from the pension funds could come in the asset monetization, and therefore they'll be able to raise enough funds. And that's one of the reasons I'm saying that probably the budget will continue to keep focus on the growth-oriented budget. And even the state that you talked about earlier between the Andhra and Bihar, on the contrary, it will probably add to the growth of the economy from the respective states. If you look at today, the aspiration of most of the states, Maharashtra is talking about $500 billion, the economy. UP is talking about a $1 trillion economy. Assuming a scenario, Bihar and Andhra Pradesh is such a powerful state can also contribute more to the broader economic growth. It will only add good to the country on an overall basis, even if they spend some money, which can be considered as something.
I agree. I'm not saying it's a bad thing if they grow. The question is, did they have to allocate? I think that's the only nuance over there. Every state should grow. No question about it.
No, but just one thing on the divestment. If a company is not a jewel, there won't be takers any which ways.
Yeah.
So that is part one. And part two, I just refer to the interview that Prime Minister Modi gave to Sanjay Pugalia before the election. He was very happy with the fact that the PSUs are growing the way they are, and therefore बेचने की जरूरत क्यों है? So that may not really be the.
I think we should get a quick view from Manish and Ravi on this because it's turning into an interesting point. A quick view from. Let me come
before we wrap up.
Yeah. Come to Manish first on it. Do you think that divestment is on freeze, or do you think that there is still some hope for it? And will we see that in the budget?
No, governments are bad fund managers. They sell very cheap and they almost never sell expensive. So. And which is why it's in some sense returns are zero sum. So markets make a lot of money because government sells cheap. Because markets are very expensive, the reflex of the government is not to sell.
Yeah. So you don't think they'll sell? Ravi, what about you? What do you think?
No, I tend to agree. I think they did a lot of QIP way back in 2020 and 21 when the stocks were not doing well. And now when the stocks are really, really overpriced, they are not thinking about doing. I think it's the smart thing to do. But unfortunately, I also fall in the camp that doesn't believe it will happen.
You know, what's interesting is in the last 6 months, we've had 450 companies, promoters who've taken money off the table in the private sector. So this is the clear difference between
but not the
government, who is the stakeholder, who is enjoying the wealth, at least paper wealth for now.
Yeah.
But thank you. Thanks a ton, gentlemen. We'll hopefully see you on Tuesday and continue these in-depth conversations. It's going to be fast-paced on Tuesday, but looking forward to seeing all of you.
Well, that's our budget think tank, and you will get a sense from all of them on the budget day as well. But of course, thanks for tuning in on this very special show. And it's a goodbye, it's a wrap on from all of us on this one. But stay tuned to NDTV Profit for more such interesting conversations.